So we touched on this story about 2 weeks ago or so. This was the process coming out of Parliament. The country's major banks had to answer to lawmakers in Parliament on Tuesday over their conduct, alleged discriminatory practices, banking costs, and the lack of transformation, among others. The South African Reserve Bank, its Prudential Authority, the Banking Association of South Africa, Financial Sector Conduct Authority, Standard Bank, FNB, ABSA, Investec, Nedbank and Capitec all attended the joint sitting of the Standing Committee on Finance and Trade, Industry and Competition Portfolio Committee. Let's welcome into the conversation Joe Maswanganyi, who is Chairperson of the Standing Committee on Finance. Good morning to you and thank you for your time. From when we were doing the preview and previewing what you were setting out to do as the various committees in Parliament, you were saying that you wanted to get to the bottom of the what appears to be discriminatory practices, particularly in relation to lending. Do you believe you achieved your objective from the hearings that took place on Tuesday?
Good morning, Tulasis and listeners. As you have said in your introduction, that we're looking at those critical issues of transformation, that is the ownership, the inclusion, access to credit, procurement, and of course the issue of discrimination when it comes to lending. And in the main, we relied on reports that come from regulatory bodies, the FSCA, the Prudential Authority, the FSTC, and of course BASA presented. This was the first meeting that we have had in this term of office. We are also going to invite other sectors in the financial services sector so that at the end we write a report to Parliament as to what can be done. And when it comes to discrimination, there is a report that we got from the Secretariat of the Office of the Disclosure from Human Settlement and as well as the FSCA, which outline the challenges that South Africans and bank clients are facing in that regard.
So let's tease out some of the aspects. When it comes to issues of transformation, the Banking Association gave you a presentation and talked about the extent to which many of the banks actually are at level 1 in terms of their compliance with relevant laws such as BBBEE. Were you satisfied?
No, we were not satisfied by the report of BASA, because when we dug further for BASA to give explanation, if they talk about the transformation which is there, we acknowledge the progress. Not that we don't acknowledge that there is progress from 1994. We do acknowledge. But BASA could not come out to say if this is 100% of FNP, Fantoner owns so much, Buthelezi owns so much, and give us that breakdown in terms of ownership. That is very, very critical. Rather than come to Parliament and say we have reached level 1, but who are the actual owners of the banking sector? That's what is very important, and they are going to give us that explanation in writing.
The other aspect had to do with the lending practices. Let's talk firstly, before we turn to rates for home loans and the likes. You also got explanations from the various banks about how much they've lent to small and emerging enterprises, many of them black-owned. Standard Bank, for example, telling you 12 billion rand to its 460,000 small enterprise clients, many of whom are black-owned. FNB telling you about 50 billion rand funding to 229,000 women-owned businesses. Was that satisfactory for you? That element that talked to lending for production versus lending for consumption?
We acknowledge that. However, if we go back to the season to 2021, when the country and the world was hit by COVID, government introduced what we call a COVID-19 loan guarantee scheme to assist businesses in distress. And that guarantee scheme was almost 200 billion, if I'm not mistaken. What is surprising is that banks were reluctant to dispense money in that regard. Only 18.4 billion was lended to businesses. And today, so many small businesses have collapsed that were there, and it has led to the loss of jobs to almost 2.2 million South Africans. There are quite a number of issues, of course, that they've raised, that they're doing. We do acknowledge that, but we believe that they can do more, because the banking sector sit with an amount of 6 trillion, which we believe can be invested in a productive economy, agriculture, industrialization, IT, and the like. We have got a huge problem of unemployment, poverty, and inequality. And this sector, the financial sector as a whole, has got 21 trillion, which they have worth of assets. And we believe that if this 21 trillion or part of it can be productively invested in the economy, it will be a huge boost to the economic growth. So we can't be complaining about economic growth when money is there. And remember, this money does not belong to the banks. It belongs to the clients. It belongs to the workers. So why don't you reinvest the money that belongs to the people?
So lastly then, what happens now? You've had the hearings. What's the next stage of this process that you are undertaking?
Of course, we had the hearing, and as you have said before, that there's an issue of discriminatory lending. On this issue, we have got the problem of the lending patterns and the practices of the financial services. For instance, blacks or previously disadvantaged, in the main, on average, they are given a loan of 527,000 compared to 2.5 million for whites. So access to mortgage finance is a problem. The lending practice is a problem. They prefer to give blacks depreciating assets loan as compared to mortgage loan. That is problematic. So we are going to invite the other sectors, not sub-sectors within the financial sector, the insurance, financial service providers. It's quite a very big sector. Then at the end, we call for a summit and then compile a report to Parliament that will outline what we are recommending.
Right.
But the issue of transformation, lending, and the charges that clients are facing is something that has to be addressed as soon as possible.